It's Wednesday, January 16th? 15th. 15th is hump day. I think I said June yesterday. I was more interested in telling you the story about my white cock. My white cock is out on the countertop today again because I've got to do some more sealing. So the black cock is in the cabinet. It's put away. The black cock is put away. We got a lot to go over. We've got Josh Brown's top stocks. I've also got six of the top AI stocks for 2025. We're going to talk about Meta. We're going to talk about power with GE Vernova. We're going to talk about quantum computing. We're going to talk about earnings. And then we'll go over some social requests. There's a lot in this. We got good numbers from inflation. We'll go over everything. The Qs yesterday, 2 little green candles below. Did you want to buy? Probably not. Does it feel comfortable that if you bought yesterday and you're seeing the market today? Because the market's, it's all green. I mean, there is so much green in this market. Let's see. There is nothing in the red in the core portfolio. And that's all due to CPI. And so here you have the QQQ chart, and we talked about how that green line is the ultimate support. When you go to the weekly and you look at that kind of anchor it at COVID, it could be down. But do you see any kind of pullback in this market? I mean, it's just a little baby downturn. It may feel horrible, but I would argue if you feel bad about it, you probably don't want to look at the markets every day. If you feel good about it and you felt like, oh my God, it's a buying opportunity, that was when you should buy. That was when, oh my God, this is a buy. Today, we're going to be up. Is it sustainable? I don't know. We'll talk about it. But one thing that I want you to make sure that you do is get an education. Okay, why do I love Fidelity as my main broker? And I don't get any referral bonus from Fidelity. I get a referral bonus from Webull. I get an affiliate bonus from TrendSpider. I get an affiliate fee from Seeking Alpha. I get nothing from Fidelity. But why do I like Fidelity? It's because of crap like this. I can go into Webull all I want. It's an app. I don't like their desktop setup. I don't like what they do on the desktop. But when I learn on a computer. And I want somebody teaching me. And that's what Fidelity has. They just sent me this invite yesterday. And they said, learn options for the new year. And it's 3 sessions from 1 to 150, 2 to 250, and 3 to 350. So 3 hours. They get you in to options. And the first lesson is getting started with options. They'll teach you everything about options. Then second lesson is executing an option strategy. Third lesson is option plays. Okay, and that's free. That's why I love Fidelity. And one of the other things you can learn from Fidelity is a tax strategy. And Kathy Woods will teach you a tax strategy as well. And she posted this in 2024. Remember, she lost like 40, 50, 60% on her investments during the 2022 and 2023 downturns of her funds. Kathy Woods, as a result of our trading strategy, capital tax losses should offset trading-related capital tax gains for years to come, an underappreciated asset associated with our strategies. She won't have to pay you. This is how Trump paid $758 in taxes. His casinos went broke. So he has that write-off for years, billions of dollars tax-free because he lost all that money. So that's, make sure you have his tax strategy. So the best article you need to read today. I read this entire thing. Several of these will be in my portfolio at the end of today. Top 6 AI stocks for 2025. Steve Kress. AI fever to have helped power 2-year bull run on Wall Street and heavy tech stocks. Not all AI stocks are created equal, as evidenced by AI ETFs, registering mixed results. He goes over those ETFs. The Seeking Alpha Quant has identified 6 top AI stocks, 3 large and 3 mid caps. Okay, solid valuations, high earnings growth. These recommendations have a levered free cash flow margin of 18.6% and have return on average 60% over the last year. Read this article. Again, It goes over the ETFs, the underperformance of the ETFs, and it goes over those 6 stocks. It is unbelievable. I love reading stuff like this. And if you want Seeking Alpha, again, there's 2 options here. You go over to the link tree. The link is down below on the screen, linktr.ee/dailystockpick. I will show you how to use the tool over the course of this podcast. But it's the second link, and the second link takes you to a bundle offer, okay? There's 2 offers here. The first is getting Seeking Alpha Premium. What does that do? It gets you in-depth analysis, unlimited reading of articles, powerful screeners, okay? That is where you're going to do. It gets you the quant. It gets you virtual analyst reports. I'm going to show you how to use those. It saves you time. And this bundle offer saves you $159 because what they do is they throw in alpha picks. And what's alpha picks? 2 stocks per month. You get the full research report. We went over Abercrombie and Finch yesterday. I was down 17%. And Alpha Picks put out an entire article about how it was underappreciated. And then you read Seeking Alpha, and Jeffries, I think it was, says Abercrombie and Finch is underappreciated. That's the power of having both of these. And Alpha Picks, the best part about Alpha Picks is the portfolio. It's the actual performance. And I can't show that. I don't know why I did that again. I can't show it. The performance of Alpha Picks is unmatched. It's unbelievable. But again, the bundle offer is what you want. It saves you, okay? It's 20% off. Get 1 year of premium and Alpha Picks for $639. You save $159. That's what you want. If you just want Seeking Alpha Premium. Again, I'm a guy that likes to do my own picks. You can get a free 7-day trial. Take the free 7-day trial. Go over to Daily Stock Picks, linktr.ee/Daily Stock Pick. This is the third link. You'll get $30 off when you sign up and a free 7-day trial. Go and read this article. Again, you can read this article and you can look at the top 10 stocks with a free 7-day trial. Okay? And speaking of top stocks, I will be doing a stock battle on Substack. Okay? If you're not signed up for the newsletter, download the Substack app because you will be able to watch this live. I think it's going to be next Wednesday at 4 p.m. or 3 p.m. I'm not exact sure. I will develop a whole thing and I'm going to promote it over the next week, but it's going to be a stock battle. Right now, I think it's myself and James Ford, who's one of the analysts on Seeking Alpha. We can go and look him up, Foord, and we get Pragmatic Investor. That's him. And he's got we're going to do basically come and we're just going to do a stock. We're going to come with 1 or 2 stocks and we're going to make our presentation. And then I'll set up a poll where you can vote on who did it better, who did a better analysis of that. But it should be fun. And it's going to be live on Substack. So it's going to be similar to the podcast, I think, with the guest, but I think it'll be good. So enjoy that one. I think it'll be good. Now, let's talk about CPI inflation because this is what's driving the market. CPI accelerates in December as expected, but the core CPI surprise is lower. CPI came in lighter than expected year over year, 2.9%, which is the first number in the 2s. Okay, that's crazy good. Good news is good news. So we had that bad news is good news kind of thing, and good news is bad news. But this is good news. Now take a look at a 5-minute chart in after hours, and I'm going to show the cues. That's what happened here, okay? This is a 1.3% market move. That's a big candle for a 5-minute candle in the cues. That pushed volumes up. Everything seems to be soaring. We're seeing the market open with a nice move up. I just bought MicroStrategy MSTX in my Webull account, live on air on YouTube. Again, good news. And if you want to trade the Qs in the 4-hour algorithm, it's going to get you an entry probably today. We talked about this, okay? The short term is extremely oversold. The RSI is coming off a 36. The MACD is below the oscillator. This is the first time it's been below the oscillator since back in September. Okay, when you had the opportunity to buy this the Qs at 468. Seems like a good idea. The last time it came near the 200 day, which is that red line, was back here. Okay. But then you take a look at the weekly and we're still stretched. But we've been all the way stretched since August and the market has gone up. Doesn't mean you don't buy, doesn't mean you get out, just means that, hey, we probably have some pullback in here. And whether it's now, whether it's a month from now, whatever it is, but there needs to be catalyst. What we get today? We got CPI. Good news. Means that the Fed's not going to have to raise rates probably this year. Now, the next CPI data that comes out, it could be bad. It could make it go down. Again, catalyst in the market. But take a look at the trend line. Okay, that green. Even if you came down to that trend line, which is like an 8% downward trend, we're still moving up long term. So make sure you set your expectation levels correctly. Long term, you should be buying when it feels uncomfortable. Short term, you should be selling when it feels like, oh my God, everything's perfect. So you've got to identify where you want, what stocks you want in your portfolio, and how long you want to hold them, whether they're a trade, whether they're an investment. Do your elevator pitches. But the CPI data, crazy, crazy good news. You know what else was crazy? Yesterday's intraday swings on the Qs. Okay, this just doesn't happen. That's a 1.5% swing down. And remember, Kramer called the bottom yesterday. Then we got a crazy move up of 1%. Then we got a crazy move down of 1% again. Then we got a crazy move up of 0.7. This is higher. This is lower highs, but it's not lower lows. So again, the trading action yesterday was crazy. I was also watching Josh Brown yesterday on CNBC. And I will post this picture. I didn't post the picture on Twitter. I didn't post it on social internet, but I will post it on the newsletter. If you're not signed up for the newsletter, go over to the Linktree, linktr.ee/daily stock pick, and the newsletter is down there. Go and sign up for the newsletter. It is free during the week. Okay. Josh's best stocks of the year. We're going to look at these on a chart. Okay. Because he took some names out. He took Constellation Energy out, CEG. This is one that I still like. He said he still loves this one. The problem is that it's run up. And when you look at a weekly chart of this one, it has run up. When you look at a 4-hour, it has run up. And so he said for the short term, Constellation is out. Okay. CEG in Seeking Alpha, when you go and look at it, it's a hold on the quant because it's expensive and their profitability is an issue. That's it. Pull up the virtual analyst report. And you'll be able to see, if it comes up. There we go. Pull up the virtual analyst report and you can see valuation is notably high with a price to book ratio of 8. Profitability metrics are mixed with gross profit margin of 21% compared to the sector at 45%, indicating some challenges in profit conversion. However, return on total assets is strong at 6% compared to the sector at 3%. You can do all the research you want. Going back here and looking at this chart is what you want to see. And right now, I'm seeing that maybe it's a bit stretched. You're seeing that nice move up there. You're seeing a big gap. It may come back down and fill that gap. He took that one out. You want to know what else he took out? United Airlines. United Airlines and Delta Airlines, both. But look at this. I mean, that's a crazy, crazy move since 42, and you're at 107 for United Airlines. He's saying it's not a bad stock. This one is one of the top quant stocks in Seeking Alpha. It's a strong buy, but has it moved too much? Take a look at the Wall Street price target. They're saying it's worth 120. That's still 11% upside. Okay. He's just saying, hey, for me, it's moved too much. Take a look at a weekly chart of this one. See the recent breakout? It's too much is what he said. Delta Airlines, same thing. This is not one of the top quant stocks, but you can see since August, it was at 39. You're at 66 today. He also took Arista Networks out, ANET, which I particularly like, but he said it's run just way too much. He goes, it needs to pull back a little bit. So those are the ones that he pulled out. And let's go over the ones that he put in. 3M. Oh, not MMX, 3M. It's 3M's is the symbol. MMM. Okay, huge breakout. It's been consolidating since September, ready to break out again. RSI is decent. Margins will drive the stock up after earnings. That's what Stephanie Link added to this. So 3M, you can see right here, I had said, hey, past resistance turns to new support. Okay, is this going to turn into support? Well, we're seeing a breakout now of 138. 131 was the old. Look at that. I mean, it's clear. Consolidation. Okay, you'll take a look at a weekly consolidation. Where's the next move up? 160. 160. Let's go over to 3M. 3M. MMM. Let's go over here. It's a hold in the quant. What's the Wall Street price target? There's 19 analysts that cover this. 145. So do I think it could move up? Absolutely. EOG Resources. Let's look at this one because this is an energy company. EOG Resources. It's a hold in the quant. What does Wall Street think it's worth? 144. It's at 135. Hit my notes on this one. Consolidated back to 2022, and it could break out. 118 or 119 would be your downside. So he said, if it goes back down there, sell it. But above 135, he said this one could just start moving. And so EOG, let's go and take a look at the chart. Again, this is how you use these things and how you watch TV or watch YouTube or do something and then do your own research. Look at this. I mean, if I just drew you this channel right here and we just drew that at about 137 and looked at 117, that's a nice little thing. And then we go and look at the weekly and look, it goes back to 2022. I can do the same thing with this. I mean, that's a clear channel that is right there. He's right. Look at the weekly. It's not stretched on the MACD. The RSI is a little bit stretched at 57. Not crazy. You know, you look at the 4-hour algorithm. It doesn't work great. And the reason is because you're in this damn channel. Okay, but if you could buy down here and then time it somehow when it loses confirmation, that's a pretty good deal. Now, would I buy this one? I'd probably wait until you get to 135 and hold it for a little while. That's what I would do. Now, BDX. He added BDX. Becton Dixon. I don't even know what this one does. Let's see. BDX. Let's see what they do. Becton Dixon and Company. They are a, let's see, healthcare. Interesting because healthcare has sucked. What do you say about this one? Another consolidation left for dead, minus dividend, and it's been trending higher since December. Breakout above 225 would be interesting. It's at 237. Well, what does Wall Street think that it's worth? 278. Okay, there's 18 analysts that cover this. So this one has been left for dead. When you look at this one, the trading range, 52-week, 218 to 248. If you got this at 218, you were doing pretty well. But BDX right here, look, 224 is where the algorithm got you in. Pretty good. Not bad. Another one that, and then I went over ANET, UAL. Let's look at outside of Josh Brown's. That's his look at stocks. I just thought I'd bring that because I wanted to show you how you could literally just watch TV, how these guys do it, and then go and do the exact same research that you wanted. You could even go to Becton Dickinson. Yeah. Inappropriate giggle. But you could go and read the analyst report right here. And you can see what the concerns raised by Seeking Alpha analysts, positive raised by them. And then you can read more from the discussion groups all about Seeking Alpha virtual analysts. You can read everything. Okay, that's how you use these tools. Now let's look at another tool. Because following TrendSpider on Twitter or X, tomato, whatever you want to say, is a good thing. Okay, they posted on January 10th. They said GE Vernova, back-to-back long wicks off previous resistance, which they show you previous resistance, and that means, look at those candles right there, okay? It breaks down. That's resistance. Relentless buying, even on red days, which was January 10th, usually means good things. So then let's take a look at yesterday, okay? That resistance right there, long wicks off the resistance, boom, 387. Let's go and take a look at this chart. GE Vernova, this is a energy company. and it spun off. It's not very old. It's just a few months, 9.8 months old. Algorithm got you in at 348. You're at 389 right now. Okay, look at how that MACD reset, how the RSI reset, and then boom, we've started taking off. When you take a look at a weekly chart, you don't have a lot of information, but it's interesting, and this is one way that you could take a look at it. When you go over to Seeking Alpha and you say, well, I want to see what the fundamentals of this one are. It's not covered by the quant. So you can go and look at the financials yourself. You know, they're making plenty of revenue. This isn't a flash in the pan. Their valuation, it's stretched. PE is 149 going forward. The PEG ratio going forward, 5.15. But I think they're going to grow into this. When you look at their growth, 12% versus the sector growing at 4%. Okay, it's not covered by the quant. I expect it to be covered by the quant at some point in time. Wall Street has 27 analysts that are covering it. They say it's worth 358. I would argue this one's going to come back up. They're going to chase this one. So you may want to just invest in VST. VST is the leading, that was one of the leading stocks in the S&P last year. It's energy. It's a utility. So maybe you don't like that and you're like me and you like big cap tech. Well, you may think Mark Zuckerberg is a douchebag. He's cutting 5% of the jobs at Meta to move out low performers. That's what you want to see as a shareholder. I want my lower performer employees moved out. It's part of the problem with Google. Okay? Google, if you don't know, Google allows employees, go on YouTube and just go look at it, a day in the life of Google. Okay? Day in the life of Meta. I guarantee you those people who have posted those videos are out at Meta, but probably still working at Google. This is the difference between a founder-led organization who is just laser focused. Do I think he's a good person? No, he's a douchebag. You know, anybody that sits there with his white face, showing off his wealth on his the surfboard with the American flag, he thinks he looks cool. He does not look cool, but he's laser focused on the business. Okay. Gene Munster wrote yesterday on his thing that this probably won't make any difference. The severance package that they actually offer, it won't save you money this year. But that's what you want to see. What are these jobs getting replaced with, by the way? He ain't hiring. It's AI. It's AI. Now, Meta, it's a hold in the quant. I would argue anything under 600 is a great buy. Anything over 600, you're just looking long term. Okay? What does Wall Street think that this stock is worth? $664. That's 9% from where you are today. When you look at all of the quant ratings, the valuation is the only F. But I would argue the growth takes care of the valuation. Is it expensive? Probably. But these guys just print cash. That's it. I love it. I love it. I need to add more of it. You can read your virtual analyst report, but I would argue this one on dips, you buy. You add to your portfolio. I think that 550 is absolute substantial support. I think 600 is where you want to buy it. And does it, say you want to put $1,000 in, that's one freaking share, $9. Go and buy it today. Just go and buy it. Again, it should be in your long-term portfolio. That's what I would say. Now, let's talk about quantum stocks, because quantum stocks were up big yesterday. Huge yesterday. QBTS up 25%. IONQ up 9%. Okay. They are up again today. Rigetti up 47%. Why? Because of shit like this. Microsoft said yesterday they are going to get all of their customers, quote unquote, quantum ready. I had no idea what the F that meant, but they mentioned quantum and the stocks took off. Absolutely took off. Then you have NVIDIA today unveils first ever quantum day at annual GTC event. It's not getting out of the news. What's my quantum stock? It's Google. And now that Microsoft brought themselves into the equation, it's probably Microsoft. If you want to invest in a stock, I think QBTS is one that Steve Kress had written about. QBTS, the quant has it as a hold. Okay, the quant has it as a hold. Wall Street, what's the price target of Wall Street? There's 6 analysts that cover it. They say it's worth $5. This one's trading at $5.83. That's 5% above where the analysts, but it's 8 analysts. Okay, they're not making money. Just be aware, they are not making money. It's right now, if we can go and look at Rigetti, this is the big one. They're not making money, but the quant has a strong buy. Okay, I can't argue with the year-to-date performance of this one. It's down 28%, but over 1 year, 786%. The 52-week range is between 66 cents and 21.42. It's trading at $10 right now, and it's up 21% in today's market. What does Wall Street think that it's worth? $6.10, 44% down from where it's trading today. But again, it's 6 analysts that cover it. So it's number 2 in the CRDO. Just spoiler, this is the top stock pick for the year. The quant has a strong buy. What does Wall Street think that is worth? $77. I'd rather hold this one. That's where I would go. But again, you have to pick your winners. And Steve Kress even wrote about qubits, QBTS, D-Wave, Carstar. This is a news article, but you can look up QBTS, and Steve Kress wrote about this one. Okay, QBTS is up 24%. 24% in today's market. So these are peaks and valleys. How do you want to use these? Well, I would say don't trade them, don't invest in them, trade them. Find a strategy that works. The 4-hour algorithm, it has you in at $1.60, has you out at $10.69. Okay, that's 980%. Over 24 months, you have 31 positions. You win 30% of the time, but you get that pump. So find a strategy that works. We can go look at the 65-minute algorithm. Okay, 65-minute algorithm on this one. It makes you 829% over 8 months. You win 37% of the time. It's a little bit better. Had you in right here at $6 and you're up at 10. Okay, it's got a lot of trades. Again, if you bring your price target in, but find a strategy that works. You want the 4-hour, you want the 65-minute algorithm. You can get them all in TrendSpider. Just sign up using this link at Linktree. Okay, it is on sale. You can go and look at TrendSpider. TrendSpider is on sale. It's $992 for the top tier. But why do I steer you towards the top tier? Because if you're new, you get unlimited one-on-one training. So I say this a lot. If you take 2 courses per month for the next 12 months, you're paying $41 per course, okay, per hour-long course. That just means that, hey, you're paying $41, but you're getting the freaking TrendSpider tool for free. Think of it that way. If that's not in your budget and you still want TrendSpider, go down to the enhanced plan. If you want standard, you can get standard. The enhanced plan comes with a lot more, including 1 free one-on-one training strategy, plus the AI strategy lab. So find, if you want to do these quantum stocks, my quantum computing play is Google and I guess now Microsoft, because those are solid companies that make money. Now, why do I like Seeking Alpha Premium too? Because when you import your portfolio, you get this nice little, hey, here's the earnings, okay? Upcoming notable earnings on the left, my earnings in my stocks on the right, okay? Anything that you put in a watch list is in there. When you import your portfolio, it's in there. And so you know when your earnings are coming up and you can keep track of it. We had huge bank earnings today. Okay, we can go to Earnings Hub. This is my favorite earnings website, and you can listen to all of the calls that are going on. But we had huge bank earnings. We had JP Morgan, we had BlackRock, Goldman Sachs, Citi, Wells Fargo. Okay, we had all of those. Tomorrow, we've got Taiwan Semi, we've got United Health, we got Bank of America, we have Morgan Stanley, all tomorrow. Let's go over these. JP Morgan, killed it. Killed it. Just killed it. Again, you can read about it. It's up 0.29%. We can look at it. Is that up even more? It's up 0.29%. But that Again, their 52-week high is 254. It's at 248. What does Wall Street think it's worth? 254. That's the 52-week high. They killed it. Again, bank earnings are strong. Wells Fargo, mixed quarter, but they gave great guidance. And look at this one, up 5%. I own this one. The quant says it's a strong buy. Okay, the quant has had this one as a strong buy since $60. Where are you trading today? 74. Okay, what does Wall Street think it's worth? 77. 3% upside. They killed it with their guidance. Goldman Sachs, part of the core portfolio, killed it. Earnings reflect strong investment banking, assets, and wealth management results. Killed it. What does the quant think of Goldman Sachs? They think it's a hold. Okay, but what does Wall Street think? They think it's worth $614. I've said it before. If you can get Goldman Sachs under $600, I think that's a good buy. As we go into the new year with a new administration, I think this is a good one. It is in the core portfolio. And so, I give you a watch list of the core portfolio when you sign up for TrendSpider. And you can see the 4-hour algorithm had you in at 579. It does well with this one. The MACD had reset. Weekly looks a bit stretched, but earnings is always a catalyst for a move up. So I like that one. BlackRock. Let's not forget, they beat for record year of net inflows. Why? Guess what BlackRock runs? IBIT, the largest Bitcoin ETF. This is a no-brainer. Let's talk about common sense. This was a no-brainer. What does Wall Street think that this one's worth? 1143. That's 13% upside. It's up 5% today. You still have upside against this one. And if you want to read the virtual analyst report, you can read. This is updated every night. Tonight, they will update all of these numbers based on today's earnings, and the AI will write. It's like having your own analyst in your back pocket. I like BlackRock because I buy a ton of IBIT. One that I've said for a long time, Citigroup. You want to know why? Because Citigroup's book value is $99 and they're trading at 77. They killed it. And we can go and look at Citigroup right here. They killed it. They're at their 52-week high. Does the 52-week high mean Wall Street's high? No. Their price target is $84. The book value, if you could just go over to FinViz, okay, go over to FinViz and type in Citi. Everybody has FinViz because it's free. I'm sorry, the book value is 101. It's 101. We can go and take a look at JP Morgan. The book value on this one, 115. It's trading at 248. Okay, this is the only bank that is out there that is under book value. Book value of Goldman Sachs, 343. Book value of Wells Fargo is 49. It's trading at 73. Book value of Citigroup, it's trading at 76, and the book value is 101. Okay, the bank has been broken. They are in recovery. But this is a very, very good move on earnings. So, and I don't know about banks. Remember, I'm a large cap tech investor. The only thing I know about banks is when you are trading under your book value, it is a buy. And, look at JP Morgan is trading, and Jamie Dimon even said it. You can just Google this. He said, why we're not buying back stock is because we're trading 2 times book value. It doesn't make sense to buy back stock when you're trading 2 times book value. Citigroup is buying back $20 billion of stock because they're trading under book value. That's it. It's as simple as that. Really, it's just that easy. Now, Michael from Instagram asked me, curious your thoughts on Airbnb. Could it be a long-term stock? I know people are worried about regulations, but most people I know personally don't even consider hotels anymore. I said, I'll add it tomorrow. I'm not a huge fan. I'm not a huge fan of Airbnb. Let me see. ABNB is the symbol, BNB, and we can go take a look at it in the quant. We're going to take a look at the fundamentals first because everybody, Seeking Alpha analysts, Wall Street, and the quant all have it as a hold. Well, let's go and see. First, we're going to go see what Wall Street thinks. They think it's worth $138, and that's a 4% upside. And there's 46 analysts that cover this, so that's a lot of analysts that cover this. Then we can go and look at the quant. The quant has it as a hold. How long has it had it as a hold? It's had it as a hold forever. That doesn't mean that it's not a buy. Like it was a buy at here at 113. Absolutely. Absolutely. That was a drop from 130 to 113. Again, overnight it updated and it said you should buy it at this price. It's probably fairly valued. And we talked about those 47 analysts. Well, look, only 6 are bringing up their earnings per share in the last 90 days. 31 are bringing them down. 30 of them are bringing their revenue up and 11 down. Could it pose an opportunity? Maybe. I mean, let's go and look at the virtual analyst report to see how this looks. Valuation exhibits a challenging valuation landscape with price to sales at 8 and price to book at 10, significantly higher than sector median. That doesn't mean $10, it's just 10, indicating a very expensive stock. Again, it's an expensive stock. Growth, despite some setbacks, Airbnb shows promising growth, with a forward revenue of 13%, substantially higher than the sector's 3%. Profitability, Airbnb boasts exceptional profitability with a net margin. Now, here's what I know about Airbnb, okay? If you're going on a guy's trip or a girl's trip and you want to stay together, you're staying together in an Airbnb. You're using VRBO. The problem that I have is I think it's very simple to actually copy this. And when Airbnbs become popular, they get off of Airbnb. They go to another platform that's actually better for them because Airbnb costs are enormous, okay? They are protected a little bit, blah, blah, blah. I don't know the whole business, but I know a few people who have had popular cabins who have rented out all year, and they do it directly. You know, you get through the Airbnb, and then they set up their own website, and then they're keeping their own money, and it's people who rent year after year after year. Now, that's if you're popular. But I just don't like something that's copyable. Trip.com is an even better stock. Again, it's a strong buy in the quant. And Trip.com, they could easily start doing what Airbnb does, or even include Airbnb listings in Trip.com. So that's where I would go with that one. Butch from Facebook, Dell, wants me to look at Dell. Now, I'm not going to look at your charts. I'm not going to look at your stuff. Oh, by the way, let's look at Airbnb. Let's use the other tool here. I just, from a valuation standpoint, I would trade Airbnb. I wouldn't actually buy it. And then on the 4-hour algorithm, I look and the performance, you make 9% over 24 months with 29 positions in the 4-hour algorithm. If you bought and you held, you made 46%. It indicates to me maybe it's a good buy and hold. But right now on the weekly chart, I don't even have a 200-day on this one. So again, the MACD is below the oscillator. It's okay. Now let's look at Dell. Dell is part of the core portfolio, and it hasn't done well since we added it. It's a bit stretched. I know the valuations of this will go over everything. Dell in the 4-hour algorithm makes you 143%. Okay, over 24 months, there's 22 positions. You win 68% of the time. So I do know, from my standpoint, I would trade Dell. You got a nice gap up here to 141. The algorithm has you out right now, got you out with a little loss here. It was one of the losses. MACD's down. We don't have any confirmation. Would I be buying right now? Probably not. You know, in the market right now, it's up 1.41%. You got your ex-dividend date. There's no real catalyst here for Dell other than maybe some news. But it's kind of interesting. Now let's look at Dell from a fundamental standpoint. The quant has it as a hold. Let's see what Wall Street says. There's 25 analysts that cover this. Their average price target is 151. That's a 36% upside. So analysts think it's pretty good. The quant has had it as a hold for a long time. Okay, it was a strong buy here at 124, and you're trading right now at 110. But remember, Wall Street thinks it's worth more. Well, let's look at the valuation. The valuation is not stretched. This PE is super, super low compared to all of the other sectors. Okay, even the PEG ratio going forward, 1.11. That's a screaming opportunity. The issue is the growth. Revenue growth isn't growing. It's 3% over year. So their levered free cash flow down 68%. Profitability is great, but their margins aren't good. They're only making 22% where the sector's making 50%. So it's a business that is a bit unwound, if you will. We can go and take a look at the virtual analyst report and see what this actually looks at. So the valuation, relatively cheap with a PE of 14, it's 39% below the sector, indicating a more attractive price than its peers. However, its EBITDA is 11, remaining 43% below the sector median of 10, suggesting the stock is undervalued. Again, undervalued. The growth metrics present a mixed picture. Earnings per share growth year over year is an impressive 57%, significantly outpacing the sector. Revenue growth is only 1%, which is notably below the sector's 5%. This indicates strong earnings growth, but challenges in revenue expansion. Profitability, again, it's the PC market. Profitability, Dell demonstrates strong profitability with return on total capital of 16%, far exceeding the sector at 3%. The robust profitability underscores Dell's efficiency. Momentum, the stock is somewhat volatile with a one-year price performance of 39%, substantially above the sector at 9%. However, the short-term performance over the last 3 and 6 months has been negative, indicating recent declines in market sentiment. Yeah, market just doesn't like this one. Again, it cost them, what they've done is go to price war with SMCI and other server rack customers, and they're counting on that to bring them additional revenue going forward. Maybe it's not a great strategy. Recent revisions in earnings estimates reveal a cautious outlook, 13 downward and 8 upward in the last 3 months. This trend suggests some uncertainty. Let's go and look at some positive raised by Seeking Alpha analysts. Dell's AI server leadership and strong ISG growth position it for significant revenue and earnings potential in 2025. You can read more about it. Okay, some concerns. Dell's AI server margins are dilutive, impacting overall profitability. Again, you can read all about this. What are my thoughts on Dell? I own at about 113. I mean, I'm perfectly fine holding at about 113. Am I selling if it gets to 168? Probably. Probably, because, you go over to Wall Street and they think it's 151. If we get up to 151, you can look at the 52-week high. It's 179. And maybe you don't like this one. Maybe you want a different one. IONQ, QM, CO, some of the quantums. Even Apple's a higher rated in the quant at 3.43. So maybe you want to look at that. Now, Eric asked me on Spotify, hey, Gary, what do you think of buying SK Growth Opportunities? It's a SPAC. So it's basically a SPAC that Webull is rumored to be going into. If you don't know about SPACs, okay, SPACs are horrible. So it's a company that has some problems and can't do an IPO because of regulatory issues. They go the SPAC route. And what's the SPAC do? It's a special purpose acquisition company. So what they do is they actually buy that company by giving the owners and dilute and giving a bunch of shares, and boom. Then the company's a public company. There is no paperwork requirement. It is very, very opaque process, and it never works. And so I would never look at actually putting money into it. Here's the other thing. Okay. This is February 28th of last year. Robinhood competitor Webull to list itself through a SPAC deal at $7.3 billion valuation. That's February of last year. And it hasn't happened. And you've moved up from $10. Every SPAC is at $10. Okay. You've moved up to $11.62. That's almost a 20% move over a year where it hasn't happened. So, Eric, I'd go running. Honestly, I don't even think that there are so many good places in the market to make money, and SPACs are just not good. You know what SPACs are? Open Door. Look at that. That was a SPAC. I mean, look at that chart. Would you want to put your money into that? Sure, you'd want to put it in here at $11 when it pumped up to $29, but people have gotten smarter. And I don't think that that's worth the risk. Again, this is over a year. Look at Open Door. This one went into a SPAC way back here in 2020. Okay, that's 5-year performance. Horrible. So I would never lead you into a SPAC. Now let's talk about some of the scans. What I want to show you is one scan that I did. So if you go over here in TrendSpider to the market scanner and you use the scanner that I provide you, you can choose a bunch of lists. I provide you Bitcoin list, a core investment group list, a covered call, which is income ETFs, energy names, levered free cash, levered ETFs, low cost Vanguard stocks, spider sectors, and a watch list. I offer you all that. But a new one that has come up is StockTwits. And so you can use the scanner that I provide to look for entries into the 4-hour algorithm. And you can just look at that and say, okay, what are the StockTwits ones that come up? It's interesting. TGTX is one. I don't even know what this stock is. TG Therapeutics. This is one that gets an entry in the 4-hour algorithm. And we can go over to market a strategy tester and look at it. Let's pull up the 4-hour algorithm and we'll see the entry right there. And we'll see the entry right here. And you can see $30.13. You're trading at $30.89. Maybe it's moving back up. Look at that nice little trend. MACD reset under the oscillator. You know, again, this is a stock that even on the weekly, you got the golden cross right there. That's an interesting one. And the other one from StockTwits that I thought was interesting was Hood. Now, I'm not a fan of Robinhood whatsoever. Go and watch Eat the Rich. Go and watch any of those Netflix documentaries on what Robinhood did. I think I think the Vlad is criminal. I think it was just a shame of what he did when he says no. They knew nothing. Bullshit. Come on. But Hood, can't argue with the performance. The performance over 24 months, you're up 425%, and they're at $45. Now, this one came up with a nice little leg up here on January 3rd. You have another buy here. January 3rd, if you got in at $40, it's just telling you, hey, it's moving more. And you're up 10% today. So, again, if you want the 4-hour algorithm, if you want the scanners, go and sign up for TrendSpider. It's the top link right there, and you'll get the sale. And then you just email me, and hey, I email you out everything. So that's it for today. Again, the newsletter is going to be out in a little bit. If you have any questions, hit me up. Okay. I'll see you later. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.